The strategy is very different than what the outcome is for some other individuals.
So let's take it. So for instance, let's say you weren't managing yourself. What are some of the write-offs that you'd be able to do if you did have a property management company?
Oh, yeah, I mean, you even if you self-manage, you can still write them off. But you have obviously, if your house is mortgage, you have the mortgage interest, repair and maintenance. And I want to say that with a little caveat in there because certain things are not immediately deductible. You have to depreciate it over time. You can write off the property management fee that you get deducted 10%, 8%, whatever the case may be. If you had to pay a commission to bring in a new tenant, sometimes commissions are paid. Any startup costs, any kind of advertising associated. If I have a property like my property in Virginia Beach, that I'm having to drive 35 minutes out, I could write off the mileage to go and check on my rental property. That's also deductible. Any utilities that I had to pay related to the property, anything with related to HOAs or subdivision fees, things of that nature. It is a Schedule E, IRS.gov, Schedule E. It gives you a nice, pretty sheet of all the different things that you can deduct. Major things like if you paint the entire house, you replace the roof, you do new carpeting. A couple of years back, I think it was like 2016, 17, and they really enforce it in 18. You have to capitalize it. You have to, spread it out over time. But there's a slew of things. Again, it's lots of benefits in renting and using a property management company just to make sure your property is taken care of.
One of the things you said that actually I didn't know at the very beginning was that you can only write off the interest to your mortgage, not the whole thing. And that was one
You
thing I didn't
ah
know when I first got
Oh
it.
yes, you don't know how many times when we're doing taxes, I'll get this little thing that says, "This is my total mortgage payments for the year." And I'm like, "Yeah, but how much was the interest?" And they're like, "Wait, I don't get to write
What?
off the whole thing?" And I'm like, "No, no, no. Only the interest portion is what deductible, not the principal portion." And they're always a little floored. And unfortunately, when individuals come to me when they've been doing their own taxes, they come to our organization, I will find these little odds and end mistakes that they've done.
Yeah.
And I always have to say to them, well, we're going to let it go because I'm not going to make you amend. But moving forward, this is what you should do.
Yeah.
Now, that brings me to one thing that is always left off, believe it or not, and that's the depreciation.
Yeah, exactly. That was my next question.
You get to depreciate your property. Now, not to go down another rabbit hole because it definitely opens up something else. But if you are depreciating your property, which is what you're saying is reducing the value of that particular property, I need for individuals to understand that the theory or the thought behind that is if I'm writing off $3,000 in depreciation, somewhere I am saving $3,000, okay, for major repairs, for replacement of my property. It's just like when individuals buy a property, you're supposed to save, depending on the value of your home, 3 to 7% or more annually for major repairs. So that when it's time to do the HVAC unit or it's time to do the roof, you have the money set aside. The problem with that depreciation expense is that a lot of times individuals that file their own taxes, even though, and I'm not going to name the companies, have done really well with being able to do your own taxes online, that section is not clear. How much did you pay for your property? When did you start renting it? So you can take advantage of that deduction. And once the year goes by, it's lost. If you didn't take the deduction, you can't take it later. You got to take it when
Yeah.
it happens.
So let's say I buy a rental property, and I believe you can only depreciate the actual building itself, not the whole thing, right?
Correct. Yes,
So
that's right.
how do you go about finding like, oh, the building's this much, and I can write it off like 27 and a half years? Is that what it was?
It's 27 and a half years. So what you do is you go to the city assessor's office. Most cities have it online, and it will tell you that the house may be $100,000, but that the land is 30 and that the building is 70. Now you may have said, well, that's okay, but the city says my house is worth 100, but I paid 150. I get that, but what you need to understand is 30,000 is 30% of the value. So you take 150 times 30%, that would be the value of the land, and then you can get the value of the building. But
Okay.
most city assessors offices, you can go, if they're not online, there is a way to find out what is the value of the land over the value of the home.
And you take that amount divided by 27 and a half
That's
years, and
correct.
that's how many you can do every year.
That is correct. That is the flat amount you do every year. Now, for most people, most of the companies that don't do it manually, back when we did fill it out manually, as I give out my age here, we used to have to look up the table to get the amount. Most computer systems, as soon as you put in how much was the property, when did you buy it, when did you start using it as rental, and fill in the value of the home and the land, it'll automatically do the calculation for you. You don't have to you don't have to worry about that.
But it really hurts when we sell those rental properties. So talk about that a little bit.
That was the other, so that